Denver is seeing lots and lots and lots of apartment construction, and yet that has not slowed down the Mile High City's apartment market, strong demand, and big rent growth. Welcome to the first ever on-location episode of Apartment Market Dynamics from NPF Research. I'm Jay Parsons. I'm joined with Greg Willett and the Big Blue Bear at the Colorado Convention Center in downtown Denver.
And we're out and about in the markets all the time. We just usually don't have a cameraman with us. But we're glad to be here in Denver. We're here for the RealPage Client Conference. Lots of folks here, lots of activity, lots of excitement, and that really describes the Denver apartment market too.
Yes, and here's the bottom line. Denver ranked third in the nation for quarter-over-quarter revenue change, revenues jumping 3.9%. Only San Francisco and San Jose did better. Seattle and Charlotte placed fourth and fifth, just below Denver.
So these are big revenue change numbers, and to get there you have to grow both occupancy and rents quite a bit for the course of the quarter. Let's start with that occupancy story, up 120 basis points just for the quarter. That takes the rate to 96.2%. Really healthy occupancy, and that means big demand for the quarter. We absorbed 4,472 units on net during second quarter in Denver. That is the biggest quarterly number we've seen in about 4 years in this market.
And that big demand number gave operators the support to raise rents meaningfully again in Q2. Rents jumped 2.7% quarter over quarter, and that put Denver in a tie with Charlotte for the nation's fifth biggest quarter over quarter hike. And with that big quarter, we saw year-over-year rent growth levels climb back up again, reversing 2 quarters of slight cooling. Effective rents for new leases were up 6.1% year over year, Denver's best number in 5 quarters, and the third biggest number nationally behind just San Francisco and Oakland.
And really impressive in those rent growth numbers. Any way you want to slice and dice it, those numbers look great. Top tier product, middle of the market product, bottom end product, urban, suburban, every single neighborhood, the numbers just looked uniformly really solid on rent growth.
And the key driver, of course, is the economy. Denver is seeing lots of job growth. In fact, Denver is in the midst of its hottest streak for economic growth since the year 2000. The market has been adding 35 to 40,000 jobs annually since the start of last year, and it's showing no signs of slowing down going forward. And that's a big plus for the apartment market, but this market is going to get tested a little bit.
It is going to get tested, and let's go back to the last cycle where we saw the huge employment growth, and that was during the tech boom of the late 90s to early 2000s. We got a lot of product getting underway during that time period, and we're having that same story again. So it's the new supply that is the challenge as we move ahead. And so right now, Denver has 11,458 apartments under construction. That's going to grow the inventory by 4.4% as all that gets delivered over the next 18 to 24 months. One of the most aggressive paces in the country, and really only Austin, the Raleigh-Durham area, and Charlotte are going to be adding more inventory in terms of the growth of the existing stock.
And when you look at where the bulk of the construction is going, it is going to where the job centers are. That's especially central Denver, also big in Broomfield and the Tech Center. And these are spots that will see some cooling in the next year or two, and that's just inevitable with so much new supply. But eventually we think demand will catch up just because of the jobs, assuming of course that the supply numbers will normalize.
Yeah, and our outlook here for this market still remains pretty darn healthy, and the completions will reduce the occupancy rate a little bit, but we think only about 50 basis points over the course of the next year, and you can still get some pretty good rent growth. We're anticipating a hair over 4% on that side.
And that should be enough to keep Denver among the nation's healthiest apartment markets. So that wraps us up for Denver. So until next time, for Greg Willett and for the Big Blue Bear, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.